Order filled.
Okay, hello. What's up? It's Quant.less here. Second video on the channel. What's good, YouTube? Let's get straight into it. So this is going to be sort of a lesson / trade recap on my trade recap for today, December 9th, 2025, Tuesday, December 9th, 2025, as well as also a lesson on determining bias. So let's get straight into it. So to start off for today, let's overall go to the higher time frame narrative and the higher time frame trend. So going into the day, as I explained in my last video, I wanted us to take out the original consolidation highs, right? As I recapped my trade on Thursday the 4th, okay? And going into the next day, Friday the 5th, we took out the original consolidation highs. And like I said, I wanted us to get a deeper retracement after taking out the original consolidation highs. What did we do? We had that deeper retracement, okay? Which is why on Monday, when we had that deeper retracement, I actually caught that short. Not the entire move, but a big part of the move. I caught, I think, 150 points out of it. I think I took the trade somewhere up here and closed out at low of day. So, yeah. So going into today, I had a lot of people asking me why I was bullish rather bearish. And it's a pretty simple question and pretty simple answer. The higher time frame narrative. The higher time frame narrative is very important to keep in mind whenever you're determining your bias. In fact, that's the way that I shape my bias, looking at the higher time frame narrative. Okay, so basically, one thing that I will say and state is that the only times that I'll ever have my bias going against the higher time frame trend / narrative is when we have stronger support towards going against the higher time frame narrative rather than going with it, which in that case I will be short term, quote unquote, against the higher time frame trend before we then can go low, like in this case, go lower, create a cracking correlation or sequential SMT to then continue higher and support the higher time frame narrative, right? The reason why I'm saying higher is because that's the higher time frame narrative as of right now. That's the higher time frame trend, right? So that was basically what I wanted to see today. We had sequential SMTs at the highs, and we had enough supporting the highs to where we should have been bearish, right? That's what some people were saying. But something you always need to keep in mind is that you'll only be short-term bearish or short-term against the higher time frame narrative, right? Because overall, you want to see that market maker model that I stated we are in until all-time highs is taken. As I said, that the original consolidation highs was like the almost quote-unquote cleaner market maker model, market maker buy model, before we then have a deeper retracement, right? And then eventually our ultimate target will be all-time highs and continue higher, right? So our objective is all-time highs, so we should be bullish, correct? So the only times that we're going to be bearish is to be short-term bearish, right? And the bearish move already happened. It wasn't going to happen off of New York Open. Here's why. You see, when we are short-term bearish or short-term against the higher time frame trend, I'm going to keep on repeating this. When we are short-term against the higher time frame trend, we are only short-term against the higher time frame trend for one reason only, because we want to seek something out. We want to take a certain draw on liquidity. We want to take something. We want to tap into something. We have an objective. Price has an objective. Price wants to take something out, do something in specific, before then continuing, in this case, higher and supporting the higher time frame bullish trend in this case, right? So here, near New York Open, I don't understand why someone would want to be bearish unless we first went higher. Then what I would do is I would wait for another sequential SMT or cracking correlation to appear to then short towards previous day low. The reason why is because we have sequential SMTs and we have cracking correlations above true opens, and just in general, we have enough supporting at the highs to want us to be bearish towards What's the objective? Previous day low, right? Because previous day low is good for us to then go lower, as I said, create a sequential SMT or a cracking correlation, and then continue to support the higher time frame trend, right? And that is exactly what we did. Going into New York Open, we were way too close to previous day low. The only way that I would be shorting or be at least a little bit bearish is if we first went higher and then created a set sequential SMT for us to then go lower. But what did we do? For us to then go lower and take out previous day low. But what did we do immediately off of New York Open? We took out previous day low, created a weekly cycle sequential SMT and a daily cycle sequential SMT. Okay, with that, SMT with previous day low, weekly cycle sequential SMT, the same thing. Then, what did we do? We had a 15-minute swing divergence with this candle and this candle, correct? Now, what did we also have? We had a 15-minute PSP forming. I could already tell it was forming before it closed. Obviously, you can tell that I had my entry way before the 15-minute candle closed. The reason why I did that was because I could already tell it was forming as YM was pumping, ES was pumping, and NQ was still staying lower, staggering lower, right? So now that we have the daily cycle sequential SMT, the weekly cycle sequential SMT, the 15-minute swing divergence, 15-minute PSP, what do? We can go down to the 1 minute time frame, as time frame alignment goes from the 15-minute to the 1 minute, as I said, correct? Now, if we go down here, this is something to do with quarterly theory, which I explain inside of my private mentorship, but this is a DFR projection. This is my DFR projection. So basically, going here, what did we have? We had a 1 minute PSP swing divergence. Okay, 1 minute PSP swing divergence, as I explained, is when one candle closes bearish, the other one candle closes bullish on the assets, right? What did we do on ES? This candle. What the heck? Why is on ES? Okay, don't worry about that. That's weird. I don't know why it skipped. Why is it skipped? Whatever. Anyway, ignore that for now. Okay, there was a 1 minute PSP swing divergence with this candle. And as you can see, we took out this candle, then we had the swing divergence with this candle, right, as we took it out on ES and NQ, but on YM we did not, as you can see. So with that candle, right? So due to that allowed me, okay, now I can go down to the 15-second to validate an entry for me. And what did I enter off of the 15-second CISD? We closed. I ended up having a little bit of a later entry as we came back down. I entered. Targeting initially was going to be true week open. I was going to target high of day at around 726 because my ultimate goal was to take out the this is a specific and a significant high, which is only explained in quarterly theory. But basically, I wanted us to take out these highs because this was the high of day, and I wanted us to create a new high of day. We did end up taking it out, but I was getting very, very annoyed that it was taking a long time. I had stuff to do, so I just closed out. More than happy with, I believe I closed out at 120 points, 110 points, something like this. So, yeah, that's basically my trade recap / determining bias lesson for you guys. One thing to always keep in mind that I'm going to repeat once more. Always look at the higher time frame narrative, the higher time frame trend. What is the higher time frame telling us? Are we bullish or are we bearish? If we're bullish on the higher time frame, as we are in this huge market maker buy model, if we're in a huge market maker buy model, we're bullish, right? So if the higher time frame is bullish, the only way that we could be bearish on the lower time frame is short term. We can only be short term bearish. That is the only way, right? So because of that, I was short-term bearish on Monday, as I knew we were going to end up having that retracement that I was talking about eventually, which we did end up having. And also we had more supporting going against the narrative, higher time frame narrative, than not. But even then, the higher time frame narrative was kind of telling me we're going to have a deeper retracement as we just took out these consolidation highs, as I was explaining in the last video. So overall, that's it for today. I hope you guys enjoyed this lesson. If you guys have any questions at all, feel free to join my free Discord. I'll answer all the questions in there. Just at me and I'll answer any questions at all, as well as in the comments. If you have any questions, concerns at all, please let me know. And yeah, that's pretty much it. Have a blessed day.